Hey, do you know how much it costs to buy a house? At the end of this video, you'll know how to accurately estimate your loan payments every single time. It doesn't matter if it's a new construction, existing structure, it does not matter. They're fundamentals. There's 4 factors that go into a house payment. P-I-T-I, not P-Y-T. That acronym stands for principal, interest, tax, and insurance. Principal, it's the amount that you're borrowing. In Houston, the median house price is $240,000 and the average house price is a little over $300,000. Interest. The interest rates are currently at around 4.75%. Tax. Now, tax is one of those things, if you're not from Houston or not from Texas, it might be a shocker. Our property taxes are around 2 to 3%. And some even higher than that. But in other states like California, you're capped at 1%. In Hawaii, aloha, you're at 0.27%. So you're at a fraction of 1%. And we're here many times higher than that. But it's for a reason. So in California, you have a state tax. So while they're not charging you on the income that you're making, they are getting that revenue from the property taxes. Next thing is insurance. In Texas, we have 2 types of policies, an all risks or a main peril. So now there's different ways that people refer to them. Sometimes they say it's a all perils or main perils, but that runs, if you want a good rule of thumb, just about 1.1%. And there's other factors that can affect how high or low that is depending on your property. Meaning, are you close to a fire hydrant? How old is your roof? How old is the house? How old are you? What's your credit score? A lot of questions. So I can't give you an exact answer, but just know 1.1% is just a good rule of thumb. So now that we've actually talked about what goes into a house payment, let's do an example. Susie Lou, which is the most Texan name I could think of, is looking to buy a house, $300,000, right? She gets an FHA loan. They approve her for 96.5% LTV, or loan to value, meaning that they will loan her up to 96.5% of the value of the house. She has a $300,000 house. That means she's going to have a loan out for $300,000 times 96.5%, which comes out to $289,500. She knows she was locked in at 4.75% at the time of her closing, so she waits to get her bill, because here's another secret they don't tell you, is that you don't pay your next bill for your next home bill for 2 months. She gets her first bill in the mail, and her payment for her interest and principal is combined $1,510. That means she has $364 going to her principal and $1,146 going to her interest. Now, mortgage payments are front loading, meaning that the interest payments are always heaviest up front, up until you get halfway through the loan. Then it switches, and then now you're making payments more so towards your principal. So you're still making principal payments throughout, it's just you're paying more for the interest up front. Going back to the topic, she told her bank, hey, I want to escrow my payments. I don't want to have a big bill due, which is a very smart thing for you to do. So her property tax is 3%, meaning that her annual bill is $9,000, just for this example, and that comes out to $750 every month. Then we take her property insurance, right? Let's say she has an all perils insurance. We're estimating 1.1%. So her payments are going to come out to $236 a month. So now her monthly principal, interest, tax, and insurance payments are going to be $364 plus $1,146 plus $750 plus the $236 for the insurance. So all of that combined comes out to roughly $2,500. Now, one thing we didn't talk about is PMI, private mortgage insurance, which is for the first 20% of the loan, which you didn't come to the table with. If you did come to the table with, this is not for you. This, you can just completely negate what I'm about to say. But you do pay a private mortgage insurance, and that's up until you satisfy that first 20% of the loan balance. So if you get a 96.5% loan, up until you get that other 16.5% paid off, you're going to be paying that PMI. Some PMIs are just there the whole time. So you might have paid off your first 20% and it's like, nope, you're still paying me for PMI. And we also didn't talk about HOAs, which if you live in a nice neighborhood in Houston, 9 out of 10 times you're paying for an HOA. And if you don't, they'll come and they actually have the power to foreclose on you. So HOAs are very, very powerful in Houston. So when you take that HOA payment and the PMI, for this example, that would add another $300 to the payment. So that would bring it up to around $2,800. But wait, Mr. Real Estate Guy, you're telling me that my payments are supposed to be $2,800, and that's exactly how much my friend is paying for his house that is $400,000. Tell me why. You're lying to me. You're lying to me. Well, I'm going to tell you the reason why. Slow down. Whoa, Nelly. It's because taxes. Most of the time it's taxes. So I'm assuming that your friend has a new construction home. They bought it, closed on it. Everything's beautiful, great home, new community. The tax district has not assessed the value of the improved parcel on that land. So in layman terms, it has not reached its full tax potential yet. Until it reaches its full tax potential, then they're going to be paying low payments. They might be paying $2,000 a month because they're not paying that very high part of the loan, which is the taxes. Look at this example, right? If you're paying just principal and interest, you have a $1,500 bill, right? So somebody's going to say like, hey, why are you living in this apartment and you're paying $1,500, $1,600? You can get a house and be paying the same exact amount of money. Yeah, you can, until they foreclose on you. Because you have to pay your taxes, you have to pay for your HOA, and of course, we don't want to have a home that's uninsured. Your lender won't allow it. So that just about wraps up our brief conversation about what exactly goes into your house payments. You should be able to go on Zillow.com or any of these websites, use a mortgage calculator, and accurately get an estimate of how much your house payments are going to be. And remember, if you have any questions, feel free to contact me. Go to my website, anthonyany.com. And remember, you're not just anybody.